what we found out from these earnings is, in fact, that in the most recent quarter, the second quarter, Nvidia came in line with the estimates. It came in line with sales of around over 46 billion US dollars, and it's projecting in the current quarter sales of around 54 billion US dollars. It actually beat on the margins of a little over 72%, came through with a buyback as well. If you're looking for flies in the ointment, there are a couple, though, and that's what's leading to some of the concern. One is what's happening in the Chinese market, and I'll get to that point. The other is what's happening in terms of the data center part of this business. Don't forget, this is a company that started off making gaming chips, and then it shifted and pivoted to GPUs for AI development and building out models. The data center part of the business, that's where AI sits, and you saw the numbers coming in terms of sales from that part of the business a little softer than the estimates. So that's one area of modest concern. Overall, what you're seeing with this company is that quarter on quarter, the incredible growth they've had, and at one point 400% growth in a single quarter, is coming down to about 50%. That is still very strong growth. It's just not hyperbolic growth. This is a Jensen Huang, the CEO of this company, who's driving not a McLaren Formula One car anymore, but maybe a Porsche. And that's possibly one way to think about it. This is also about an ecosystem and about a company that is somewhat built on a dream and a future in which we are all using AI in our everyday lives, and then it reformats our global economy. And we're only in the early stages of that. China remains a clear question mark for this company, to the point where they weren't even incorporating sales of the chips into the Chinese market, and they aren't projecting any sales in the current quarter as well. So that remains a key area of concern, where certainly analysts and investors want more clarity.
Yeah, so walk us through what we learned when it comes to the impact of Trump's tariffs on China, and particularly they're going to charge this 15% commission on Nvidia AI chip sales to China on this business, and how they're seeing it now.
Well, interestingly, the CFO of Nvidia told Bloomberg that they haven't actually signed an agreement with the Trump administration about that very unusual structure of 15% on sales into the Chinese market that would go to the US Treasury. So that still needs to be nailed down, it seems. We've got to a place where the chip that had been designed for the Chinese market for Nvidia, the H20, had been banned by the Trump administration. And then they said, actually, you can sell it into the Chinese market if you give us 15% of revenues. Again, they still need to lock down the details of that agreement. Then China came back and said, you know what? We don't want our companies using H20 or Nvidia chips. We want them using domestically produced chips. So Bloomberg Intelligence, our team there, say that essentially the door is closed on the H20. Nvidia is building out another chip for the Chinese market, the Blackwell, which is more advanced, and Jensen Huang, the CEO, sounded pretty optimistic that it could get to a place where the Trump administration signs off on that. That could be where things open up, because Jensen Huang sees the Chinese market potentially as being worth 50 billion US dollars, would build on his views around long-term AI infrastructure valued by the end of this decade of between 3 to 4 trillion US dollars. Again, they haven't factored in any China sales into the current quarter. If there is a reset in relations or an opening there, that could be material, because they have been historically getting a little over 10% of their revenues from the Chinese market.